Hey guys, what's up? Alec back with the daily stock market, and look at that. We have individual stocks down. The overall market as a whole is pretty flat on the day. However, ChargePoint down 9%, Square down 5%, Snapchat down 3%, down to $9.42 per share. So in this video, we're going to talk about some stocks that we haven't talked about in a while, starting off with Square or Block down 5.2% on Friday, and in the past year they're down 25%, and in the past year they're down 41%. So it's a very interesting 5-year chart here. But before we do that, just slap a big thumbs up on this video because you know it's going to be an absolute banger. Share this video with a friend and make sure you're subscribed on YouTube because it's the only place to find the full length videos. Now with that being said, let's dive right into it. So Block, or ticker symbol SQ, is down 41% in the past 5 years. And if we go to the max chart, the last time it was close to $50 per share was in 2018. Rewind 5 years in time before Square shot up to $275 per share. It's basically like buying them at that price point of $50 per share. So we're going to go over a few different stocks, see if they're a good price point. Starting off with Block at $53 per share. Can it go to $250 per share again? As you guys know about Block, they own Cash App, by the way, and they also provide and operate through Square, which is a segment that provides businesses the ability to accept credit card payments. The Cash App segment offers an ecosystem of financial products and services to help consumers manage their money. Okay, so it's a big company. A lot of people use it on their day-to-day, but their market cap is only 32 billion. So yes, there is a chance that the market cap could go closer to 50 billion once again or higher. Because it has sold off, but we'll dive into the balance sheet and the income statement, revenue and net income, and see what's going on, if the price is justified or if it's undervalued at $53 per share. Now, some bullish things to consider with Square: electronic payment growth is shifting overseas, and Square's business model looks portable into international markets, as the company does not rely on a large local sales force to attract merchants. Okay, services are becoming a more critical engine for growth and will help Square fully monetize its merchant client base and improve margins. The ongoing shift towards electronic payments has created and will continue to create room for payment companies to see solid growth without stealing shares from each other. Okay, and that's a big thing to note because things like Bank of America and JPM could come out with their big Square and PayPal killer in the coming years. Right now, if you didn't know, PayPal and Square are the two biggest competitors for each other. Okay, Square's relatively high pricing will likely put a ceiling on its eventual market penetration. Square has not yet shown that it can convert its strong growth into better profitability, which we'll look into in a second. And Square's focus on micro and small merchants increase its macroeconomic sensitivity. Okay, so here we have Square's income statement pulled up and we have their net income pulled up. So what we can see in 2018 is they were losing $38 million per year, and they came into profitability in 2019. And that's when the share price really shot up. They had $300 million in profitability for the year, and they were showing signs of profitability. However, that started waning down in 2020 to 200 million in net income, even less in 2021. And now, fast forward to 2020, their most recent year, they had their biggest loss reported for their yearly. $500 million was reported as a loss. So you can see why the stock is sold off so much, and you can see the risks really involved with this company. The net income just is not there at all. So if we pull up a quarterly graph, we can actually see that it's getting a little bit better, but it's still very inconsistent. We can see 2022 Q2 was their worst quarter, and they've been getting better and getting better. Q1 2023 was one of their best ones with only a negative 19 million loss. But we really want to see Square coming into profitability again. That's probably the biggest thing to look for when dealing with a company like this. Their revenue has stagnated Okay, so in 2018 it was 3.3 billion, and then it grew significant amounts to 9.5 billion, nearly a 3x from 2018 to 2020. That's when they actually had the profitability years, and now they're still having good annual total revenue, but they cannot translate that into profitability. Okay, so we really want to see not only the revenue growing, not stagnating. We want to see it growing, the total revenue, and then we also want to see that net income at least get to somewhat of a profitable number. Their balance sheet, however, is the thing that's holding this company together, and it makes sense for them almost to take these kind of risks because their balance sheet is only getting better with time, which is a very odd thing to see because they're, the obviously the assets are not coming from their net income. Nothing from their net income is showing that their balance sheet, their assets on their balance sheet should be so high. Okay, so maybe they have a lot of investors, something to look into, where they are getting these assets from 2021 to 2022. Their assets grew by 100%, taking their assets to 31 billion and their liabilities are only 14 billion, totaling around 45% assets to liabilities. Now, while we are talking about Square, we might as well directly compare them to one of their biggest competitors, which is PayPal, down 4.6% in the past 3 months, 17% year to date, 36% in the past year, and they are also at a 5-year low with a 31% downward movement in the last 5 years. Have not been profitable at all. They also had a huge spike up the same time that Square did. And remember, a lot of this growth was attributed to the pandemic, stay at home. People had to accept payments over iPhones and credit card payments digitally and not in person. And that's where PayPal and Square really shine. Okay. So that there is a possibility in a few years for PayPal to get above 150, closer to $200 per share again. Same with Square. That stock could rally 100% as well. PayPal's more of my favorites of the two, but let's compare. Let's look at the balance sheet on PayPal and see what's going on there. So right off the bat, you should see why I like PayPal a little bit better. If we look at the net income since 2018, yeah, they had 2 billion in profitability. They're not losing, and they've never lost for a full year on their net income for the last 5 years in a row. So that's a really great thing to see. First of all, okay, in 2018 to 2020, their most recent yearly report, they have an increase of around 0.4 billion, from 2 billion to 2.4 billion. However, they have died down a little bit from their peak of 2021, which was a negative 41% loss. That's not as concerning as something like Square, for example, that's reporting negative quarters, negative years on their income statement. PayPal is showing growth, and that they could bounce back and report as a profitable company, which is the most important thing. They've stagnated a little bit on their revenue quarter over quarter, not much going on, but even to see double digit growth, 10%, 9%, that's very great to see quarter over quarter growth on the revenue. If we look at the yearly chart, we can also see from 15 billion to 27 billion growth in their total revenue. So not only has their total revenue grown from 2018, not only has their net income grown since 2018, but their balance sheet, if we scroll down, look at their assets, they have also grown. Not to mention their liabilities have grown also, with 74% debt to asset ratio. But if we're looking at 2018 numbers, so if we take 2018 into consideration, we can see that the numbers on the balance sheet, the total revenue, the net income are all significantly better on PayPal since 2018, and the share price is the same price. For Square, the numbers are worse than 2018, and the share price is the same price as 2018. So therefore, I think PayPal is a better deal than Square. The only real concern about PayPal, in my opinion, is the balance sheet. For example, we can see that it has 74% debt to asset ratio when Square is closer to 40%. Okay, I think that with the new CEO, with PayPal, I think they'll have that under control. And historically, if we scroll back, we can kind of see that they've always really been in that 60 to 70 range in the last 5 years. If they could get back to 2016 range to 55% debt to asset ratio, I think that'll be a great thing for the company. And I think PayPal overall is a great long-term trade to hold for 6, 12, even 24 months or longer and see a bounce back to above $100 per share, 120, even 150 per share or higher on PayPal. And real quick, let's look at what analysts have to say about PayPal and Square. We can see that overall analysts have a price target of $87 per share on PayPal in the next 12 months. And if we just hit that price target of $87 per share in the next 12 months, that'll be a 43% upside on that trade. You know, if it happens in the next 3 to 6 months, $87 per share, that'll be a 43% swing trade on PayPal. We can see where some of these analysts are coming from. We have a 5-star, a 4.3-star analyst from Bank of America Securities with a $90 price target, just reiterated that 3 days ago. We have a 5-star analyst from JPM and Truist Financial, $85 per share price target and $100 per share price target. For Square, you have a little bit more upside reward, but there's also more risks involved with Square. Right now at $53 per share, analysts have $87 per share in the next 12 months with a 64% upside, and a high of $110 per share and a risk of $65 per share on Square. If we scroll down, we can see that a lot of these analysts haven't touched this stock in a while. And like a 1-star analyst just reiterated it, a not ranked analyst. Here's the first 4 and 5-star analysts right there. A $90 price target, an $85 price target, and a $75 price target on Square in the next 12 months. So I hope that inspired you to add PayPal and Square to your watch list for the end of 2023. Personally, remember, I like PayPal better, and I think it could pay off in the next 12 months on a swing trade or even a long-term trade above 12 months. All right, guys, thank you for all the love and support you've been showing on the channel. That's the end of the video. If you want to join my close friends list where you can see signals that I post all the time, when to buy, when to sell, option contracts, strike price, expiration dates, I post it all and everything in between. Now thousands of people are in our group following along, so DM me to join if you want to follow along. Also, we can see, thanks a lot, Alec. This is since I've joined your Instagram close friends list and Discord, up 96%, $8,500 in the past month. Okay, so it's a great time to join. Go through, click on success number 9 and read through some of these positive testimonials that have been happening. Lots of success have been happening from the group. Unfortunately, I can't post them all, so there's even more success coming from the group than what's posted on just the highlight section of my Instagram. So if you want to see the full thing, DM me on Instagram. I'll shoot you over my website so you can check out all the details. Thank you guys for all the love and support. Share this video with a friend. I'll see you guys in the next video. Remember, don't time the market, buy the market. Peace.